In this video, we are going to talk about crypto market will crash again. So before starting this video, please like this video and subscribe to our channel for the future updates. The price of Bitcoin fell below $35,000 on Wednesday night as a result of reports that Russia was conducting a special military operation in Ukraine. Bitcoin has dropped to its lowest point since late January as a result of the decline, which also affected Ethereum and futures contracts for US stocks. Bitcoin has been trading over $40,000 for the majority of the month, following a sluggish start to the year for the cryptocurrency. Because of its decline below $34,000 in January, Bitcoin's price has fallen to its lowest level since July 2021. It is worth noting that Bitcoin's price has been falling in recent weeks despite an ongoing inflation surge, the stock market's worst month since March 2020, and persistent indications that the Federal Reserve will begin raising interest rates at its next meeting in March in an effort to combat inflation at the time. Officials from the federal and state governments have shown an interest in more stringent regulation and engagement in digital currencies, as well as the prospect of launching a government-issued digital currency. In the meanwhile, in recent weeks, the price of Ethereum has followed a similar path to that of Bitcoin. The price of Bitcoin has fluctuated between $33,000 and $50,000 in the days after its near $52,000 peak on December 27. In spite of the recent downturn, Bitcoin began the year 2022 on a rather high note, thanks to a robust November and early December period that gave way to the recent downward trend. After beginning the year in the $30,000–$40,000 region, Bitcoin rose steadily throughout the year, reaching its current all-time high on November 10 when it crossed the $68,000 mark. Despite the fact that Bitcoin's price has fallen dramatically from its most recent all-time high, many analysts believe that the cryptocurrency's price will eventually rise over $100,000, characterizing it as a matter of when, not if. Ethereum's price surpassed $4,850 just a few days after Bitcoin reached its most recent all-time high in November, establishing a new all-time high for the cryptocurrency. Following the recent peak, Ethereum has experienced a similar amount of volatility. A high of more than $60,000 was reached for Bitcoin back in April, and the price fluctuation since then exemplifies the cryptocurrency's volatility at a time when an increasing number of individuals are looking to get their hands on some of the action. Bitcoin saw a huge swing in price between a low point in July that brought it below $30,000 and its most recent high point in November, a period of many weeks. The future of Bitcoin is certain to contain significant increases in volatility, according to industry experts, who believe that this is normal. This is one of the reasons why we've spoken with investment professionals and financial consultants that advise against investing a large portion of your account in the asset class. The company collaborates with clients to ensure that unpredictable cryptocurrency investments do not get in the way of other financial responsibilities, like as saving for a rainy day fund and paying down high-interest debt. In the stock market, you have a high probability of losing everything, but a low possibility of gaining it all, says Nate Nieri, a certified financial planner at Modern Money Management in San Diego, California. As a rule, he advises not to bet a sum that would strain your family or prevent you from reaching your goals if you were to lose everything. What makes this new fall different from prior ones, or even from routine stock market losses, and what does it signify for investors, is not immediately clear. What does this price drop mean for cryptocurrency speculators and investors? Price oscillations are to be expected for people who invest in cryptocurrency for the long term using a buy and hold strategy, regardless of how long they have been investing. According to Humphrey Yang, the personal financial guru behind the website Humphrey Talks, large market drops are nothing to be concerned about. He says he avoids reviewing his own assets during unpredictable market falls to avoid becoming excessively concerned. I've gone through the 2017 cycle as well, Yang says, referring to the crypto collapse of 2017, which saw many major cryptocurrencies, including Bitcoin, lose a significant amount of their value. I'm well aware that these things are quite unpredictable. On certain days, they may drop by as much as 80%. Experts advise that you restrict your cryptocurrency investments to less than 5% of your whole portfolio value. According to Bill Noble, chief technical analyst at Token Metrics, a cryptocurrency analytics platform, if you've done that, you shouldn't be concerned about the swings since they'll continue to occur. Volatility is as ancient as the hills, and it isn't going away, Noble asserts emphatically. It's something you're going to have to live with. Providing your cryptocurrency investments do not interfere with your other financial objectives, and you have only invested money that you are eventually willing to lose. Yang advocates using the same technique as you would with any other long-term investment: set it and forget it. If this sort of severe decline disturbs you, it's possible that you have too much riding on your cryptocurrency assets to risk losing everything. You should only invest money that you are comfortable with losing. However, even if the price decline has caused you to reassess your cryptocurrency allocations, the same advice applies. Don't act rashly or completely restructure your approach too soon. You should think about what you would be more comfortable with in the future, such as devoting less to cryptocurrency in the future, or diversifying through crypto-related equities and blockchain funds, rather than directly purchasing Bitcoin, though you should still expect volatility when cryptocurrency markets fluctuate. Don't bother to look into it. That's the best you can do in this situation. If you let your emotions to get the better of you, you may sell at the wrong moment and make the incorrect judgment, Yang warns. Is it possible to be interested in cryptocurrency but not to invest yet? However, other experts believe that cryptocurrency is too distinct from traditional investments to draw any historical analogies. Yang's set it and forget it approach to cryptocurrencies mirrors his mindset for investing in the traditional stock market, but some experts disagree. That's why Ashira Nelson of Savvy Girl Money is distancing away from the situation entirely. Nelson generally invests in low-cost index funds because she believes they have a long track record. Because of the newness of Bitcoin and the absence of trackable data, she is suspicious of these wild fluctuations in the market. Potential investors intending to purchase the dip should be aware that swings are unavoidable and they should plan on experiencing more of the same in the future. Much if you invest now, while prices are still relatively cheap, be prepared for prices to fall even further in the future. As a reminder, only invest what you are comfortable with losing, and only after you have taken care of other financial objectives, such as emergency savings and more traditional retirement accounts. What is the source of the most recent Bitcoin drop? However, volatility is difficult for individual investors to deal with, according to Noble. While many investors accept Bitcoin's price fluctuations as part of the game, others are not so sure. He, like Yang, cautions against making a hasty decision. Recent price fluctuations have occurred as a result of renewed uncertainty around the country's protracted battle with COVID-19, as well as new regulatory moves taken by the United States government. A small amount of information may cause significant price fluctuations in a new and untested sector like cryptocurrencies. As a whole, new short-term investors who are selling their holdings in response to the recent decline may be contributing to the decline in the value of Bitcoin, according to a research by Glassnode Insight, a blockchain analysis business. Noble believes that, while swings are to be expected, some of the recent large reductions have taken him by surprise. What do you think of our video? Let me know in the comments section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.